I believe it is time.
A couple
So,
minutes after. All right.
so I guess we can go on to the next slide.
Excelente. Love that first slide though. That looks awesome. Oh, look at this.
Oh, good. I forgot we had the next date set as well. So that's wonderful. Yeah, we're on a monthly cadence at this point, and probably after that, we'll go back onto a bi-weekly, I'm thinking, once we get into the September kind of fall months. But mark your calendars, and we'll see you again roughly a month from now.
Right on August 8th, or no, 6th. I'm
6th.
sorry. My eyes, they're failing me. Yeah, August 6th. Yeah. Oh my gosh. Did everyone have a great 4th, by the way?
Yeah, absolutely.
Good, good, good. That's what we like to hear. So, righto. So yeah, August 6th. Put it on your calendars. Oh, look at there's John, who's not here today. CEO, co-founder of Best Innovation Group, doing some really, really cool stuff out there on the technology side of things for credit unions, and has been doing so for many, many moons, as we all know. And then there's me, founder, creator, host of CU Broadcast. Yeah, and I've had all these guys on our show from time to time, so it's always good to see you guys outside of the CU broadcast realm. So yeah, if you guys want to go see some latest and greatest stories and what we're covering these days, go to cubroadcast.com. Got a whole bunch of stuff there. Yeah.
Am I just late to the party, Mike, or have you added a bit more in terms of the some press releases and some other kind of industry news? Because
Yeah, I have like a whole news section now where people send me press releases and stories and stuff, and I'll post those as well. And we have like another section. If you scroll down the homepage, I have just kind of like things happening in the financial services sector where we'll have stories from payments.com or CU Times or that type of stuff. So you can just kind of a hodgepodge, if you will, of various stories happening in the industry. But yeah, we're covering a bit more stuff. So
it's
yeah.
even more of a one-stop shop than it already was. Wonderful.
Making it, yes, kind of like a library, like what Lou has behind him. We're having a library of credit union content, if you will. So yeah. Thanks for noticing.
You want to take the sponsor announcements, Mike?
Sure, I'll do America's Credit Unions. Special thanks to today's sponsors. America's Credit Unions is the only national association that advocates for the entire credit union movement. As your strongest advocate, they promote, support, protect, unify, and advance the credit union movement. Visit them online, www.americascreditunions.org, doing some amazing stuff for credit unions out there on the advocacy side of things. They're juggling many bowling balls these days, as we all know, with all the issues and regulations that are going on in our industry. So yeah, good kudos to those folks, and thank you for their support as well. Glenn, you want to take on a little?
Maybe taking a little bit of a bow right now too, because the big beautiful bill having passed now, the new taxing and spending, the things that were most problematic for credit unions wound up not being there. So
exactly, the whole tax thing.
No news is good news from that standpoint. The credit card interest fee cap and things like that wound up not getting in there. The Credit Card Competition Act, which were both threatened to be added as amendments, and it's amazing how much work goes in behind the scenes to keep that.
No doubt. Yeah, good point.
Our friends at Illuma, I'm sure you all know them already, and now they are defending two-time Best of Show winners at Finovate. They've won each of the last two events, and I'm guessing, I haven't seen them for a fact, but I'm guessing I'll see them on stage come September in New York for the next Finovate. Illuma Shield, the voice biometric solution, is I think the key product that has really gotten the most attention in terms of its ability to detect deepfakes. So you can authenticate people in a totally seamless way and be comfortable and compliant. So you can find out more by checking out the URL, but I'm guessing that most of you know about them already. If you're plugged in enough to know about us, you're probably plugged in enough to know about Illuma. So
well said, sir. Well said, Glenn. Wow, a true professional you are.
Innovation Club, and I need to be reminded of the next dates. I believe are about September 24th and 25th. Melissa, am I close?
That is absolutely correct, in Corning, New York.
So, and yeah, Corning, New York. And what is that? What is it? Corning Credit Union, or who is it?
Yes, it's Corning Credit Union.
So that we do the 2 in-person sessions each year and monthly virtual sessions as well, but. This one, the fall in upstate New York is certainly nothing to sneeze at. So maybe hay fever season, but I'm still
When do you guys have a date for that?
24th and 25th of September.
Oh, does that coincide or kind of revolve somewhere around Finovate? Because that'd be kind of cool to kind of couple those two together?
I had just thought about it. Finovate is the 8th through the 10th. And Melissa, I was actually going to drop you a note because I know I'm going to be on the agenda at some place. And one of the things I thought would be interesting is the best things I saw at Finovate. We can talk about that as one of the sessions, which usually winds up being a podcast as well, but we can get into a little more detail about the product set when we're up there. So if anybody is interested, and if you're not already a member of the group, scan, find out more, and we'd love to have you join us.
Yeah, it's a cool thing. Cool thing indeed.
Yeah, Mike, I'm sure you've been to more than one.
Dozens, Glenn,
yes.
Dozens. All right, let's welcome our guest, shall we?
Yes, Marcell, thanks so much. I actually reached out to Marcell based on a press release that I saw about a youth banking initiative that they are helping support. I believe it's a Utah Community Credit Union was one that the press release was about.
That one, Desert Financial just recently as well. So
congrats.
Yeah.
Well done.
So I thought, I mean, youth banking is a pretty hot topic, and just in general. I mean, one thing is how you define youth banking, but as we all know, the average age of credit union members is aging and graying, and we are looking for any way to engage and enlist the next generation that we can. You seem to be, is from what this initiative, at least, Marcell, is aiming even earlier in terms of really getting people acclimated, even before they probably are, clearly before financial independence. We're talking about teenagers, right?
Absolutely. Actually, down to kind of the single digit, kind of 6, 7-year-olds. You need to learn about money. I know my kids, all they saw was a card swipe. So we're kind of targeting that, call it 6 to 19 years old at this first phase.
So the goal here is really just have an open conversation about what you're seeing. I know you've got some research that you've looked at. I think quoted McKinsey's Financial Life Survey too. But I think everybody who's part of a credit union who's on this call would agree that that's got to be one of the top strategic priorities, is engaging younger members. So can you tell us about? I don't know if it's a different journey that you've had with these couple of early adopters, or anything that you can share about success stories to date, what got them on board, how, a little bit more about the program.
Yeah, absolutely. So Incent is focused right now on youth banking, and we're really covering, this is just a starting point to what we are building, which is a life cycle banking strategy. And that life cycle banking strategy is enabling credit unions to provide personalized digital experiences across their entire life cycle from cradle to grave. So if you think about kind of what the big challenge is for credit unions today is, number one, like you said, the members are aging. There's a lot of fraud going on with the elderly. You got the great wealth transfer, depending on who you talk to, anywhere from 70 to $90 trillion that's being handed down. And as you think about the members aging, those deposits, if the child or grandkids or other siblings aren't at that same institution, are going to, those funds are going to go elsewhere, right? I actually
exactly. It's too late. By the time the money's transferred, they've got the
exactly. Exactly. And that's the key reason of why it's so important to get the youth, right? And I think every credit union in the nation understands that, look, we've got to find a way to get the youth, but how do we make ourselves relevant to the youth? And that's what Incent is bringing to the table, is a youth digital banking experience that's wrapped around a youth account, right? So many credit unions have youth accounts, could be savings or checkings, et cetera, but there's no digital experience that is for that youth. And so we've created an experience that wraps around that checking account that supports financial education, call it the learn side, the burn side, and spending, and how do you manage money. There's a savings buckets, right? So the kids can save for their next video game. There's a charitable giving module. There's the favorite one is a lending module, parental lending, where you can loan your kids money, but you can apply interest to it anywhere from 0 to 25%, and teach that kid about high rate interest at an early age when it's only on $20 versus $20,000, right? So those are the components.
I'm thinking that reminds me a little bit of the 401k system. At least when I took out my first mortgage, you can basically loan money to yourself.
Right. Yeah. Exactly. Yeah. So we're pretty excited. We have today about 35 institutions signed, about 25 live.
Wow, that's a lot more than I thought. Wow.
Yeah. So the company's been, just to give you a little bit of background, the company was actually started back in 2018 by a gentleman named Richard Logan. He was the CIO of Credit Union of America out of Wichita, and he built a proof of concept back in 2018 for his kids because they kept asking him for money for chores and all kinds of other stuff. And so he decided to create a proof of concept and built a little website where the kids would go in and take a picture and post the picture into the website, and then that would be proof of evidence. And then ultimately expand. So over the last 7 years, they've been basically getting the integrations done with all the major core providers as well as the digital banking providers. There's two components, right? There's the core. So we're integrated to Scimitar, Correlation, through an SDK, XB2, DNA, all the core, but we're also integrated into all the digital banking solutions. So this is an app that does not require a standalone app. We're actually plugging into the existing infrastructure. And the business model allows the institution to retain the deposits, to retain the interchange associated with the debit card, and retain that relationship. You look at companies like Greenlight, they run on sponsor bank models, right? So those funds, any institutions who are partnering with Greenlight are basically giving their deposits away, right? Because you have to move money into a Greenlight account, and that's their sponsor bank. Now that those funds are at that sponsor bank, the interchange is at that institution, at the sponsor bank, and you also lose the relationship, right? So we're the I call it the stoplight for Greenlight, because the model is focused on financial institutions. Like I said, we have 30 customers. Our largest is RBFCU out of Abilene. RBFCU is out of San Antonio. Sorry, we have a FFIN is in Abilene, and Desert. And just to give you a couple of kind of key data points, some of you may have seen the Desert Financial release. They launched in November, December-ish of last year. So we're about 6 months in. And here are a couple of data points. Number one is they've grown their youth accounts by 32%.
Well done.
In the last 6 months, right? They have also attained an adoption rate of all their youth accounts about 30% in the first 6 months, right? What they've also seen is a 22% increase in deposits in those youth accounts, right? And the average number of transactions per user is about 8.5 transactions for about $150 a month, right? So when you start thinking about that from a deposit acquisition, they also brought in net new members, not just their existing members opening up a youth account, but net new members who open up the accounts for the kids, right? And
that was my next question: is how many of these are an existing member that says this is great, a way for my kid to get involved, versus, I mean, I assume you have to have an over 21 sponsor to get in.
You do. You have to have a 21 and older sponsor. And so when you think about the kind of structure, so number one is there's existing youth accounts that are sitting out there, with the kids, but again, no digital experience. So one is around how do you retain those youth so they don't go off to Greenlight or SoFi or Chime, right? So this creates some relevance and engagement for the youth for those existing accounts. So that's one bucket. Number two is increasing your youth account. So if a parent is a member at the institution and they have kids, now they have a tool that they can actually help their kids create better financial habits with real world money, right? So that's an expansion of the youth accounts. And then they call it the kind of the pot at the end of the rainbow is bringing in the adults as well, right? Because an adult has to sponsor that kid. And so now you get two accounts, and now the parent starts to see, wow, this is great. Maybe I should move more of my money over here because it's a great credit union, it's a great service, et cetera. And as we get into other life cycle components like the elderly, now you can bring mom in, now you can protect mom from fraud and things along those lines. So it's been a very interesting kind of journey, but exciting journey because it's actually showing results that are conducive to the growth of a financial institution or credit union, not the kind of the detrimental side of pushing deposits out and losing interchange and losing relationships.
Yep.
The one question that comes to my mind when you mentioned, the fact that they've got their own card and it doesn't have to actually then the balance doesn't have to wind up getting routed to another sponsor. Is the card, are you a white label? Are you co-brand? Do people see the Incent brand, or how does that work?
No, today they do not see the Incent brand. It is completely white labeled. If you go out and look at two primary examples I use, so Desert Financial, their program is called Kickstart. So if you go look at Kickstart, you'll see that they've created specially branded cards for the kids. So the institution, it's all their bins, right? So we don't take them off to another bin. It's their credit debit cards, it's their bin. Another one is High Point. High Point, a credit union. They're only about 300 million, but they've done a phenomenal job at launching their entire youth banking and checking program concurrent, right? So not only just creating a youth checking account, it's actually wrapping the incent product around, and I believe they call theirs Little Brownies is their brand name, right? So each institution kind of creates its own brand name. We will be coming out with a co-branded solution, because one of the challenges that we found is that a lot of institutions, especially smaller ones, don't necessarily have the resources or capabilities, or maybe even not the knowledge about this kind of youth banking segment. So, bringing to them a co-branded solution with a go-to-market, kind of a turnkey go-to-market,
Exactly.
eliminate a lot of the overhead to try and create your own brand, right? So we can give you a brand and a full kind of turnkey go-to-market.
Although having said that, you just mentioned a $300 million credit union that took on that work, but yeah, it sounds like you're agnostic to it. If they want to come up with their branding, that's great, but you'll run a co-brand and kind of manage that piece as well.
Absolutely. Yeah.
So the other thing, you mentioned the kind of the end of the rainbow being the parents, but I'm actually thinking about the double rainbow there, because eventually the youth age into the point that they're adults and potentially parents themselves, and obviously have much higher balances.
Yeah, absolutely. Well, that's the idea, is like start with the youth, and as they age, provide that next level support of services for that young adulthood. So if you think of the fintechs like Chime and SoFi, they focused on that young adult, right? And so SoFi kind of had focused on the student loans, Chime had focused on the early payday and their kind of early life cycles, and then they continued to expand for full banking, but it was always focused on the young adult. So we also see a transition of that experience, that digital experience, to migrate to that young adult experience, because a 7-year-old girl is going to have different needs than a 18-year-old or 22-year-old boy that's in college, right? And so they're going to have different needs. And so we think about, how do we continue to provide that relevance so that they still stay with you and not have a gap in that experience, right? So young adult and then adult, pre-retirement and post-retirement is kind of how we think about it.
So from a roadmap standpoint, it sounds like you mentioned there's obviously a vision or an aspiration that you can do with the elderly and parental assistance accounts and things like that. But it sounds like maybe the first roadmap is just making sure you're hitting all the milestones in early teen, late teen, and making sure it's relevant.
Yeah, absolutely. Like there are a couple of things that we want to add just to the baseline service. For example, online opening of a child account, it doesn't exist today with any credit unions, like where you can actually go online and set yourself. And it's because it hasn't necessarily been needed. It's always been an added joint account. Yeah. Well, the model is flipped for this particular journey, because you want the kid to be a primary account holder and the parent's a joint owner. And then when the kid turns 18, you just drop the joint, and now that person, and now you have continuity, and there's no friction in that experience. If they get to maintain their account, and then we just give them additional capabilities within the digital experience in that next phase of their life. Right?
Is there a commonality of the folks who have gone live, especially the big names that you've got out there? Are they a common core, or is there something about them that they kind of refer each other, part of the same kind of credit union league or something? I'm just trying to think of how they what is it that kind of brought them all to the table early on?
It's either a common core. So I would say probably 75% of maybe 80% of our credit unions are on Scimitar.
Okay.
And then we have DNA, XB2, like I said, in correlation. And then the other common factor could be because of the digital banking provider. So we integrate into the digital banking experience for both the child and the parent. And so we get a lot of referrals from the likes of Alchemy or Q2 or NCR, which is now Candescent, that are referring business to us, to those clients to us, right? And so that's another common element. So it's either common core or common digital. We've got both, fortunately, and it just makes it a lot easier for financial institutions to get the youth banking solutions set up.
I think you said this before, but just to make sure I'm clear. So it's a single sign-on? Is it a separate app you have to load, or does everything take place within the banking login experience?
Everything takes place within the banking experience. So the parent gets either, depending on the digital banking provider, it could be a widget within various number of panels. It could be a single page, and then the kid is also an SSO into the existing digital banking system. So it doesn't require the credit union to have a standalone app, right? That way, when the kid again turns 18, we turn off the child features and we turn back on the adult features, right? So it keeps that continuity between the member and the relationship with the institution.
If anybody else has any questions, please either open up. There we go. Do you integrate with Flex?
I
Well,
do.
Yes, I was going to say, Mike, you've already interviewed. If there's any real highlights here that you.
No, I'm just curious as to how, because kids want to be engaged with, they want to do something on a daily basis. I mean, so how do you keep them engaged? What features and functionality?
Great question. I think the most commonly used feature across the entire spectrum is pay for chores and pay for grades.
Yep.
Right. And so what the parent can do on the pay for chores is they have a task list. They can assign the different tasks to the kids. And as the kids complete the task or the chore, they have to take a picture of it, show proof of evidence, right, that it's actually been completed. That goes back to the parent. And let's say it's going back to you, Mike. You'll say, Mike, Joey just finished washing the dishes. And you'll take a look at the picture and you can either approve it and it'll send it in real time, transfer directly to Joey, those $5 tasks. You can deny it, or you can send it back with a qualifier and say, look, you forgot to put the plates away, right? Do it over. So
Tough crowd.
So we think about, hey, we're all parents at some form or another, right?
Oh, yeah.
So that's one. And then for grades, of course, now it's lower dollars going out now because it's summer, but when school starts, we see a high lift in paper grades, right? So you can set how much you're going to pay for each grade. And so when the kid gets their report card, they take a picture of it and they plug in the A's and B's, et cetera. Again, it comes to the parent reviews the grades and clicks submit or approve, and the money goes into the kid's account. So that's the most common, because that can be used for anything from a 6-year-old on up to your 18-year-old, right? And then the other ones are things like the savings goals. Parental lending is a
cool one.
Talk
about that one real quick. Cool. Can you talk about that one real quick, Marcell?
Yeah, absolutely. So there's two components to it, to requesting money from a parent. So one of them is just a request. Hey, Dad, I need $10 for lunch or whatever it is. And you can send it through the app and you can click yes, and he'll get his $10. Or if it's a bigger item and the kid wants to borrow money, right, you can request the loan and the kid gets to pick what the term is. That's a 1-year term, but you can do payments on either a weekly, bi-weekly, monthly. There might be one more, but in either case, what the term is, and then they can send that as a request, and you look at it, you review it and see what it's for, and you can apply, like I said, 0 to 25%, and it'll show the full amortization table for you and for the kid. So it's a great way to actually teach the kid, again, on low dollar volume, like what does interest mean and what are you paying on principal and what are you paying on interest, right? The kid gets to see that, and every time they make a payment, they get to see that $2 went to principal and 50 cents went to interest. So it just gives an opportunity for the parent to actually sit down and say, okay, look, I'm going to teach you about borrowing money. I'm going to loan it to you, but here's what you're going to do. But here's the cool thing. At the end of the cycle, at the end of the term, you can either keep the interest or you can refund the interest back to the kid if they made their payments all on time.
Big reward. I like it. Well, I mean, and that also sets them up for the future too, because sometimes, obviously, your first loan for a car or your first loan for a house can be a very intimidating experience. This kind of gently onboards them or puts them on the on-ramp to doing something like this. So when they do get their first loan for the first time, they're familiar with the process.
Right.
So
Exactly.
I love that part of it.
And I think about when I went to college and kind of the first day of school, you go to the student union building and there are 6 or 7 institutions that with their tabletops with credit card applications, right? And I had no idea. I grew up with zero financial intelligence. My parents didn't have me, obviously.
The same way.
Right? And so I got my Bon Marché card, which was kind of like a Target, right? And I went out and spent money, and I didn't really understand the impact of not paying it on time and things on those lines. So, my credit score went down over my college years, and it took me a while to get it back up. But if I would have had that opportunity to understand what it meant, before, obviously it could have changed the direction of, my life from a credit perspective, right? So
cool. I think we have a couple of questions in the
A
chat.
couple came in about integration with Flex, CMC Flex Mobicent. Is that something you work with? Or
Yeah, so we have not integrated to Flex. We've had a couple of conversations with them, but obviously we need a sponsor institution. So, building through the core, it's just a couple of transactions. One is getting your balances and transactions and then transfers, right? So it's fairly lightweight, but it still needs to be done. But to answer that question, we are not integrated with Flex yet, but would love to partner with them to make that happen.
Now, is Incent a QSO?
Incent is a QSO. Great question. Yes, absolutely. Yes. So they are QSO, and Pioneer Credit Union is the kind of first owner member into the QSO. And so we're expanding that and really looking for kind of progressive institutions who can help guide us in our journey of what to build. And we'll obviously figure out how to build it, but what are the things that we need for your members to maintain that relevance, right? So it's a collaboration. We did this when I was with Payveris back in the day, and it was a great collaboration of being able to bring a very set of progressive, engaged credit union product or digital owners into a space where we can bounce ideas off each other and then say, okay, here's what we're going to build, here's the priority, and we collaborate. So that, I think, is an important part of that critical piece of that QSO is really just a collaboration. So
you mentioned the gentleman that basically started this as kind of a passion project who was it a credit union in Wichita, did you say? Or I forget where you said.
Yeah, he was the CIO of a credit union. So he was the founder of Incent, and he's still with us. Right?
Okay,
so
but that's not Pioneer. That's not where he came from.
No, that's not Pioneer. Nope. That was this was 2018 is when he was at Credit Union of America. Pioneer, we just started the QSO just this year.
Okay. I'm always curious how that happens. Was Pioneer is like one of those, hey, they like the product so well they bought part of the business? Were they in the process?
Yep, that part of the business, and then again the ability to help kind of drive the strategy and the innovation. Tracy is the head of operations over at Pioneer, operations and digital, very progressive. And we collaborated with her on some other products in the past, and so yeah, they were the first to jump in and say, yes, we want to help participate and build this out. And so yeah, it's been an awesome journey.
Now the link to our interview is in the I put the link to our interview with Pioneer in the chat. Right, yeah. I'll watch that and find out that whole story. It was Tracy's awesome, by the way, as well. So
yeah, she is. She really is. Yeah.
Now, the press release that I saw, which I believe was with Utah Community, also mentions a partnership with MDT.
Yes.
How do they fit into the mix?
Well, so there are two different press releases. UCCU is a standalone. We also did a press release with MDT. So we actually partnered with MDT. So we are a preferred partner for the youth banking solution within the MDT client base. So we work with them. They run Banno and Scimitar. So we have about half a dozen MDT customers either in process of implementing or in live, or plus some additionals that are considering it. So
that's another it's preferred
partnership. Yep, you got it. And UCCU is unique. They're out of kind of the Provo area, and they started the youth banking kind of program with the accounts, savings and checking. And then they ultimately selected us as their, call it digital banking spirit accounts for those youth, because it's interesting. They actually have a very young demographic because they're in that college area where you have BYU and Utah Community College. Well, it's not community anymore. I think it's Utah Community College. I forget which. Anyways, they have a large demographic of younger folks, but then they also want to, bring the kids of those younger folks, or as they get married and continue to grow, they want to be able to bring their kids in, and they see that as an opportunity to get that early engagement, and then the retention gets even stronger because you're providing that level of engagement and relevance, while they're kind of still in their teens.
Now, what was your own journey? You're a relatively recent recruit into Incent, if I'm not mistaken, right?
Close, yeah. So I've been in the space for about 30 years. Michael and I have known each other. We know John best. Mostly all on the fintech side. Covering digital banking, Check 21, and remote deposit capture and payments, etc. And my last stint, I was with Payveris, and we created a QSO there. We actually were the first ones to create that QSO model that allows credit unions to invest and have ownership in their partners. Because generally the QSOs get together and they say, all right, we have a problem we're going to solve. We're going to go do it together. This was the first time that we set that up. And so I joined Typhone a couple of years back.
Yep.
And one of the key areas of focus for me was, how do we tackle the family banking? Digital banking in and of itself is 30 plus years old. It's fairly, I hate to say commoditized, but it kind of is, right? And there's not a lot of differentiation amongst the overall ecosystem. And so this was a strategy to figure out how do we disrupt kind of traditional digital banking and provide something that's unique. And the concept originally was focused on family banking. I'm looking at that. And we ultimately concluded that it's not just about family banking, it's about life cycle, because as a kid, 24-year-old, I may or may not have family, but the credit union still wants the 24-year-old, right?
Yeah.
So it becomes more about how do you provide that unique experience to that individual throughout their life cycle. So Typhone invested into Incent, pretty heavy investment there. And so I joined Incent officially back in February-ish, right? But it was just a roll up into
demonstrating. Yeah, you've already demonstrated your passion for the mission, and then just
yes, absolutely. Yeah,
that's what I thought. I just want to make sure I had that story straight too. What? And please, anybody else who has questions, please weigh in. These are supposed to be active, interactive conversations. One that I had, and Marcell, I gave you a heads up that I'd be asking about this. I didn't want to totally catch you off guard because it's a little kind of a tangent, but the ultimate youth banking is in the big beautiful bill that passed this last week. Is
right.
You have these newborn accounts with $1,000 available, and I've seen that both the Defense Credit Union Council and CU Daily, I'm sure other people have as well, have really been pushing hard and championing the notion that credit unions need to have a play in this, and talk about a way to lower your average age. Now, I'm not 100% certain, like a lot of things in this bill, they don't seem to be totally fleshed out yet. So I don't know that we necessarily know exactly how that's going to work. It doesn't sound to me like a regular savings account, because pretty much by definition, it's going to be invested in ETFs and kind of in market tracking kind of products. Yeah. What's your thought? Is this a logical kind of synergy between what you're doing and what would be happening there?
Yeah, absolutely. I mean, look, I think that we all know that there's a fight for deposits, right? So deposit side, but that's kind of more tactical. I think the benefit in the long run is really if you get that initial account and a parent has multiple kids, it's one, you may get additional accounts, but ultimately it's around the relationship and how do you start to build a relationship with that parent and their kids account, and how do you make sure that kid is now being set up for the college savings. So I see this as a jumping off point for credit unions who participate in this to actually get into the households much earlier or provide something unique around those accounts that could be different from other financial institutions. So I really see it's a jumping off point, because we're talking about people who are from 2025, so 7 months old right now, right? That's the oldest.
right.
That's the oldest that are going to have any.
They're not going to be taking out a bunch of loans from their parents quite yet.
Yeah, it's an investment in the future, right? So it's figuring out how do you take that youth account and promote, yes, we're a part of this and you can save with us, et cetera. But hey, here are all the other things that we can do if you have other kids, right? And so there could be a jumping off point to provide again youth banking services. It could be a parent who's actually putting money in this, getting the money. Now, what else can they be doing to kind of fund that account for their kid, right? So I think it's really just a jumping off point. I think it's great that government's going to give kids who are born over the next 3 years $1,000 to get started, but it's really just a jumping off point, right? Because every institution can support it. It's then okay, well, what can you do that's different for that next step? For that kid's life, when they get up to 6 years old, what are you providing for them, or what are you providing for their siblings, or what services are you providing for that parent that wrap back around the kid and that kid's future financial health and wellness.
I mean, it seems like it would almost have to be yet a second account compared to what you're offering, because as I'm hearing it, I don't want to say set it and forget it, because the goal isn't just to put that $1,000 in and let it grow, although it is supposed to grow. But the
Right.
idea is like a 529 or anything like that. You're supposed to be adding to it. What you're not supposed to be doing, and in fact, I think you're prohibited from doing, is actually running, debits out of there, and
Right.
assigning
Exactly.
a card and going to the grocery store or the candy store or whatever.
Yeah, absolutely, right. Because you can still have the kid can have their own savings account where they can pull money from, right? At some point, that's kind of that first phase when you get to that 6 or 7 years old. That's where you should start learning about money, because you see mom and dad and grandma and grandpa swiping cards all the time. Kids have no perspective on what that really means. I had a 13-year-old niece that lived with us for a little while, and she was always asking for buying things, and I'm like, okay, I need to find a way to teach you what
Yeah.
you need to do to earn to buy your own things, right?
Right.
And so this being a tool to do something like that is just, it's going to help not only the financial institute, but also the parents, right? A lot of parents out there don't have financial literacy, and so they may be learning for the first time about some of these things with this app, right? So I think there's a couple of different ways that we can help not only drive financial literacy and education within the kid, but also just through osmosis, to some of the parents as well. Right?
Do you plan to actually have educational modules, or is it kind of learning by doing?
There already are. Yep, okay. There absolutely are. There are educational modules built into the service today. One of the things and the kids have access to it. There's quizzes, and there's actually gamification. So if you watch a video, you get stars and trophies and things on that lines. One of the other unique things is like for the paper chores or paper grades, more likely, some credit unions will participate in actually paying for grades as well. I know a lot of credit unions are focused on working with high schools or financial literacy and things on those lines. So they will contribute to the funds for the kid for the grades. Financial education, the trophies, for example, Cap Ed out of Boise, Idaho, they support a big annual hot air balloon ride. And so their program is called RISE. And within this RISE program, as kids are completing the quizzes, et cetera, they will basically look at that and give kids rides on the balloon if they're at the top of their peer. So, things along those lines. So there's different ways that a credit unions are also kind of contributing to the parental, let's call it monetary value or experiences and things along those lines.
That's interesting. And again, bringing it back to those newborn accounts, I mean, there's talk that, employers could also use them as a way to contribute in, I don't know if that's just a matter of vesting or whatever, but, I hadn't really thought about, other than parents just rewarding their kids for grades. When you were saying that, it almost made me think a little bit of like the process, like, workflow enabled expense reporting and things like that, where it's like, okay, I'm going to submit my receipt showing that I've got and I thought, oh, well, you could even like integrate maybe to some, online grading systems. They just get the grades automatically. And then I realized, the most recent modern version of that are folks like Ramp and Brex, where they're advertising on TV, just snap a picture of it and we OCR and we take care of it. So that may be the way to go. And the one person you don't want to commit fraud on probably is your parents. You're probably not
right. That's not a good start.
they're going to figure it out, and I think there's going to be probably a bigger recourse even than you would get from your credit union, I'm guessing.
Exactly.
Rachel just made a comment. I think that's a great point. Mentally stronger kids. It's kind of like the example that you just gave, Marcell, about just earning it, not just saying, okay, what can I buy? So I think,
absolutely. Yeah, I think I saw that some data, and it's probably off just a little bit, but I know it was north of 40% of kids don't know what earning money means, right? And it may even be higher than that. So I'm trying to be conservative. I'll find it and shoot it to you. But there's definitely some data of kids not knowing what it means to earn money, right? Because our parents now, we pretty much give stuff to our kids, most of our, and it's. It's because we want to give them, give them a better life than we had, things on those lines. But it's also we need to be responsible enough to show them how to get them set up as they go out and to the real world, right? As a young adult.
I'm guessing the answer is all of the above, but I'm going to ask anyway. And so Desert Financial, I'm assuming, is the biggest credit union you've got in production at this point?
No. RBFCU, Randolph Brooks out of San Antonio.
Oh, okay.
They are 18 billion, and I think number 10 on the credit union top, call it 25.
What was the story behind that one? How'd they get involved?
They were looking for ways to capture engagement in they call their program STAR. So it's their STAR program. And again, most institutions understand the need to get some engagement for the youth, right? Because of the aging of the members. And so they wanted to find something that would help kind of drive engagement for the youth, because other than that, the kid does, one, they don't have a mobile app, right? To actually see how much money they have. Or they have a mobile app, but it's the adult version, right? And so, there's a bunch of stuff that's in that experience that's irrelevant. So it just creates a lot of clutter. So they just wanted something that they could provide to the youth that would help drive engagement and builds retention, kind of a loyalty to the institution, right? Because again, a lot of kids that have youth accounts at these credit unions go off and open up bank accounts or fintech accounts and just pull their money out if they have it,
right?
Because they haven't had any relationship with the credit union, and so this was a digital tool to start building that digital relationship under a branded name of STAR, by RBSCU, right? So that was the key thing is retention and then account youth growth.
And you mentioned, I don't know if that's the lowest, but I think High Point, you said, is about 300 million. Is there a sweet spot that you think, you can, obviously you can run the gamut in terms of you provide this to?
Yeah, I mean, yeah, absolutely. I would say the sweet spot is probably that, call it, well, I don't know if there's really a sweet spot from a credit union perspective, because all credit unions need to do this.
Yeah.
From a business perspective, our sweet spot is the bigger institution.
Yeah, the bigger the better, because it's your volume game.
Yeah. So we can help scale the business with the bigger institutions, but from a credit union perspective, every credit union, we want to, especially because we are QSO, we want to make this as affordable for all credit unions, regardless of size. So we're working with a couple of different partners to kind of figure out how do we scale this. And I think that goes back to providing a turnkey co-branded solution where, yes, you get to plug your logo in, but we have digital banking and core integration, which are the key points. As long as we can keep that, call it, kind of build low overhead from an installation perspective, continue to push that down. We're thinking about how do we push out self-service capabilities where if you want to change the colors, you can do it yourself. So we're just trying to figure out how do we get it for that, call it, the $40 million credit union that has, 200 kids and 2,000 members.
Yeah.
We're trying to figure out how do we just continue to drive down the cost so that we can actually provide every credit union in the country with a version of the youth banking. Right. I think it's critical, right? I think I mentioned earlier, top 10 credit union, 80% of their deposits were held with members that were 70 years or older.
Wow. Okay. I expected that to be a high number. I did not expect that age threshold to be quite that high. Wow.
Really high.
Yeah. It's high. And I've heard a lot, somewhere between 60 and 70%. I think it's is it LPL, the wealth management, the big wealth management organization for credit unions. Is it LPL, Mike? I forget their sale. Anyways, they provide a lot of insurance services for credit unions, right? Yeah. I just forget the name of it. But in either case, they showed a slide about a year ago about just on average across all credit unions that the deposits, around 60% of deposits are held by members who are 65 years and older.
I mean, I wonder how that compares to other non-credit union institutions. I mean, just by virtue of people accumulating wealth over life, you'd expect it to be disproportionately high, but that's still a much heavier concentration.
That's really high. How is that sustainable?
It really is. And that's what's scary. I mean, some institutions, because they were tied to SEGs, right? Yeah. I mean, there's a lot of community FIs now, but because they're tied to SEGs, right? One, that age group has continued to get older, obviously, but the child, call it, coming in and banking with the same account with the parent is not common, right? I mean, there has to be, especially if they're turning 18. If they're 6 years old, 7 years old, great, you can open up an account. But they turn 18, again, they've got a world of options to open up an account. In fact, a very specific data point that I think is critical here is that in 2023, 47% of all new accounts that were opened at fintechs or pure digital banks.
Yeah.
So you got half of the population is now opening accounts at these fintech and digital banks. And guess what the demographic is of those digital bank customers, right? It's the youth, right?
Yeah.
Youth and young adult, right?
That's one of the things that this newborn account thing kind of makes me nervous, because I figure that the vast majority of those accounts, by definition, it's going to be the relationship the parent already has at whatever institution, or if this is going to behave more like a brokerage than a savings account. I mean, I've heard them called savings accounts, but they're kind of just set it and forget it brokerage accounts. If I think about them as an ETF or something like that,
right?
What's the name they're going to think of? Robinhood. They're going to think of a fintech,
right? Yeah.
Right? So that's the part that, getting ahead of that to me is pretty darn important.
Yeah. And to that point, actually, that's one of the reasons we're working towards a co-branded solution. As I was doing a lot of research on this, I would ask, the credit union employees, okay, anyone from, use Greenlight, and get hands up occasionally. And I'd ask them, okay, well, how did you learn about Greenlight? And 9 out of 10 times it was because their kid had a friend that was on Greenlight and said, hey, I want a Greenlight card, right? Greenlight debit card or whatever, right? So there's this halo effect as well, similar to Zelle, right? Zelle wouldn't have been Zelle if it didn't have, financial backing and scale and things on those lines. So, again, we're going to provide options, but we also want to make sure that those who may not have the skills or the capabilities to be able to launch a service, youth banking service.
Yeah, the one slight disadvantage you have there, unless you have at least co-branding, is kids know about Greenlight cards. If one place is calling it, a Kickstart account, and somebody else is calling it a Star account,
yeah,
not going to know. But that's there's only so much you can do. It's funny that you mentioned that too. First time I've ever heard this. Just last night, we had a workman come over to the house, and I offered it. Said, "Can I pay you by Venmo?" He said, "What's Venmo?" I can take Zelle. It's the first time I heard Zelle that actually had greater name recognition. Again, he was a somewhat older gentleman, which may have explained it, but still.
Yeah.
I was waiting forever for that to kind of flip, and apparently it has. Now, are you doing this just for credit unions, or are you working with banks as well?
No, we are working with banks as well. 90% of our base is credit unions.
Okay. You started with credit unions, but obviously you're leaving the field open.
Yeah, absolutely. Well, look, I think we all know that credit unions tend to be a little bit more progressive in their approach to the digital experience, and willing to take on a little bit more kind of risk in terms of just making sure that they're providing the best experience. So yeah, it's a great place, kind of a market to work with with early adopters, right? So
are you seeing any difference in the kind of questions or appetite from a bank versus a credit union prospect?
Yes, actually, there are two things, but they're both related to the economics. So one or two of our banks actually charge for the service.
Okay.
Credit unions have never.
No one to date yet has done that.
Yeah, exactly. So the banks are more focused on the ROI. The credit unions are more focused on the experience and what they're trying to accomplish, right? Mm-hmm. It's more of a long-term play than immediate ROI. But for those who are thinking about the ROI, let's go back to that data point with Desert. For the average number of transactions per kid is 8.5, right? So if you think about that from a revenue or ROI perspective, say the average revenue is 25 cents, right, on a debit transaction.
Yeah.
Right. So 8 transactions, there's $2 of revenue that's been now incremental to the institution because that kid is running 8.5 transactions a month. That pretty much covers definitely covers the per user fees, but it becomes a accretive revenue as opposed to just a cost center, right?
Yeah, if you can make that argument, if you can show that ROI, I mean, even before you get into deposit attraction, retention, et cetera.
Yeah. So that's the biggest difference, I think, between the credit unions and banks is, the banks are looking for more of an ROI and the credit unions are looking more for, better experience for their members and something that's going to help them maintain relevance.
So how do you plan to continue, well, aside from things like this and being on with Mike on CU Broadcast, how do you plan to spread the word? We're obviously a pretty close community, so referrals go a long way, but
yes,
other ways you're kind of getting the bigger megaphone out there?
Yeah, well, so we use William Mills as our PR firm, right? They've been around for a long time. So we work with them, and we're doing a press release probably once every 3 or 4 weeks. Like there's so much
Well,
going
every
on
time you
these
have a new
days.
client coming out, or a couple of them, yeah,
Yeah, exactly.
drumbeat.
And so that's one obviously, but we're also working with our partners, whether it's core provider, for example, MDT, right? We attend and sponsor their conference. We meet folks there. The bigger conferences like Financial Brand and
Oh,
FinTech
you've been a
Meetup.
financial brand. Okay.
Oh, yeah, absolutely, yeah. So it's a traditional kind of mechanism for kind of that mass marketing, to build that exposure, and those, and obviously working with having conversations with Mike and with you and the team. Obviously, there's probably credit unions on this call that had never heard of Incent. So it's getting exposure that way. So yeah, we obviously need to be very conscious of what we spend. Overall, like we all do, right, for marketing, and be as targeted as we can to kind of support what we need to get that awareness and thought leadership out.
Now, you mentioned substantial investment from Typhon. Are you still a standalone, or have you integrated with
We're
them?
still a standalone. Yep, we are still standalone. Yep, absolutely. Yeah. We didn't want to create a call it barrier to partnering with other competitors of Typhon.
Right.
So this is a market opportunity for us to support what credit unions are looking to try and do, which is capture more youth. And so we left it as a standalone, complete separate board, executive team. So that way, like I said, we're looking to partner with other digital banking providers, and it's moving along. So I think it's accomplishing what we want, and what we're looking to do.
Well, based on our chat window, looks like you have an opportunity, or at least some interest in exploring Flex a little bit further.
Yes, we do. Yep. And whomever that is, Cynthia. Yep, Cynthia. My email is probably an invite. So feel free. And if you don't have it, it's mking@incent.net.
Mike, or anybody else? Any questions? This has been really interesting, and I think it's a fascinating topic, and it sounds like you've got an awfully impressive solution to go after.
Absolutely, yes. It's exciting. It's great to see the level of interest. Again, I don't think I've run into a single credit union that hasn't said, yes, we need to engage more youth. So it's an exciting time in the space, and being able to provide something back to, we call it humanity. It's not just about building software. It's how do we change lives and make an impact and make a difference. So that's kind of personal to me. I grew up, like I said, zero financial education. My parents didn't have any, and so my charter now is really, how do you help others kind of build good financial habits. So.
Well said, sir. Well said. Yeah, and I think this is kind of a table stakes type of topic as well as the credit union, and as we alluded to at the top of the show here, is we have to get younger membership wise. So, because an average 50-year-old membership, I'm not sure how long that's sustainable. So I think what you're doing, Marcell, and many others out there, I think it's great for the industry, and I hope it's a smashing success, because our industry will exist for much longer because of it.
Yeah. No, we're excited about it, and appreciate you guys inviting me to the show here, and look forward to seeing you in person again sometime this fall. I'm sure, yeah. Mike, I run into you everywhere, right?
We'll both. I'm sure we will all cross paths someplace on the circuit, especially when things get fired up again, starting around Labor.
Yep. Absolutely.
Right after Labor Day.
Melissa, anything else from the town hall administrative items and whatnot we need to be wrapping up with?
Anything we missed, Melissa?
I don't think so.
All righty. Well, I want to thank everybody for coming today. And Marcell, thank you as well for coming and sharing the story about all the cool things that credit unions are gaining from it. I love all the success stories, the anecdotes that you shared as well, just kind of proof in the pudding that this stuff works, and credit unions can get younger. And again, I think it's a very, very important issue in this industry. So yeah, good stuff, man. Good stuff.
Always great seeing you, Mike.
Likewise, sir. Likewise.
Thanks, Melissa. Thanks, everyone.
And we'll be back on August 6th. So mark your calendar. You'll get an invitation, but that'll be our next session. Until then, thanks for joining us.
Yeah.
Bravo,
Exactly.
everybody.
Why am I-
Bravo. That was
We were there,
awesome,
too.
John.